I think anytime you have a volatile day, and when I mean volatile, I mean to the downside, I think you have to be taking advantage of that. It's something we recommended to our clients on Monday. That said, I think you have to be mindful of the fact that his job is not complete, and there's likely more volatility to come. He's naturally going to be data dependent. That's what he talked about. My sense is that this is a man who is behind the curve, and he needs to make sure that markets desensitize to the fact that rates are headed higher and there's going to be a balance sheet runoff. And so as markets digest that, I suspect that we have not seen the lows. Now, that said, I know I've been pretty different than Farmer Jim, who said that was the low. We've seen the low. I hope he's right, because our forecast for year end is that stocks can end the year higher. I think what we're questioning is the path traveled to get there, and we want to make sure that we're positioned in a way to really take advantage of the volatility that we think we're going to continue to see in the short term. And this is not an easy job for this man. I am telling you, you have to focus on inflation, which is clearly there, and not upset the global growth paradigm. And by the way, the Fed sets the tone for everywhere else. They need to be maybe a little more hawkish, Scott, than some of the other countries around the world, which is why we're pivoting in that direction. Policy was never eased as much there, and it doesn't have to come in as much, and those areas are cheaper. So those are some of the things we're thinking about, and we think we have to be data dependent and reactive.
Okay, so Jim Lebenthal, since Rob mentioned you, and you're kind of the man of the hour with this call that we put in the bottom the other day, you know, FundStrat's technician, the chief technician over there, Mark Newton, says, and I'm quoting now, the severity of Wednesday's reversal in U.S. stocks likely means a retest has begun, which should take SPX back down to test and even breach Monday's low by a small amount. Key levels to watch carefully lie near 42.87 on the S&P, which, if breached, should lead down to 42.22 and then under to 41.80 to 4,200. You comfortable still, Jim, with that call?
Yes. Yeah, I'm going to stick with the call. Mark Newton is a very talented technical manager, but I'm looking more at the fundamentals and, importantly, the market sentiment. We wake up this morning, Scott, and the market, in my opinion, is hyperventilating about there's going to be 5 sequential raises by the Fed of the Fed funds rate, which if they do it at sequential meetings, that means the 5th one will be sometime in the fall, September, October. I have to tell you, trying to predict what's going to happen 7, 8 months from now, I think it's folly. I honestly think it's folly. I'm comfortable saying that they're going to raise rates in March and they're going to be data dependent thereafter. I do think they'll raise more, but I think for the market to get all worked up about 5 rate hikes is wildly premature. That's what knocked things down on Monday. You know, we may go a little lower from here, but I think Monday is the low. And more importantly, this is a time to buy, period.
I want to make sure, I mean, you did listen to the Fed chair yesterday, right? Because, I mean, we're not only talking about the prospects of rate hikes, we're talking about simultaneous quantitative tightening going on at the same time, perhaps at an even faster clip than the market was prepared to hear yesterday. I mean, Jim, amid suggestions that maybe the Fed chair was going to throw some sort of dovish bone to the market, not only didn't he do that, he was arguably more hawkish than the market was even expecting that he might be.
I see it differently, Scott. I see what he said yesterday to me. What he was saying is, I don't know. And the market doesn't like to hear that, but that's the truth of the matter. Inflation got away from him. He and the committee are taking the steps they need to rein in inflation. But I heard him say that the path is not knowable by anyone, him, the committee, or market prognosticators. It's going to be data dependent on what happens with inflation. I got to take him at his words. And by the way, the indications I have, whether it's goods or labor, is that inflation has topped out and is ready to set lower.